Hey everybody, hey traders, Chris Pulver here. It is 3:45 Eastern time, and I was just running late to the live session. So rather than doing a live session and forcing the last 15 minutes, I'll just post a video update here for my final hour. And so it's Tuesday, just before the close, 3:45 p.m. Eastern time. What we are dealing with this week is a bit of a foggy data blackout, where all we really have lined up this week for the U.S. news is FOMC meeting minutes on Wednesday at 2 p.m. Eastern time. Thursday's unemployment numbers, non-farm payroll that was delayed last week to push out to the 10th, which is this Friday. We may not see that data. So FOMC minutes on Wednesday, no labor news as far as unemployment claims and non-farm payroll. From what I see on the calendars right now, it still remains tentative, and it doesn't sound like there's going to be a resolution going into the end of this week. So does the market really care? Well, historically speaking, the markets have been positive during shutdowns. I think this just looks bad either direction from I will say this. From what I'm seeing, we had a live session about this morning. The next pay cycle for a lot of non-essential or essential workers in the U.S. government is October 15th. I would imagine that the government is not ignoring this, and I think that they are understanding that getting something resolved by the 15th would be wise before there's some political backlash. So, anyway, we're sitting here. You can see that there's a green and red flash. All that is my weekly candle is turning from, it's right now hanging into positive territory. But if we slip a little bit lower, this could go negative for the week. So, a couple things I want to point out here. We just tested the highs from last week, but we didn't really close above them, and today's price action is almost looking, we're going slide here, a little bit of consolidation. One thing we did slip into is negative gamma today. So my daily profit play, we're sitting right around the 50% ATR to the downside. We had a win this morning. We are in negative gamma below 67.30, and we ended up dropping today to about 6,700. Now, I think for the day, we only have 13 minutes left for the open, but this will be an interesting price action play for tomorrow, because if we go high to low and we consolidate here, are we going to see more selling through futures overnight? Are we going to open up to a gap lower tomorrow? Or are we going to see intraday price action, here, little consolidation, and then another push to the downside tomorrow if we remain in negative gamma? The VIX is up over 17. We saw a nice little spike on that today. So are we making, higher lows in the VIX? Are we going to breach? I'd say if we breach above like 17.6 or 17.7, there might be a run into the VIX around 19 or 20. That would also probably push the market down, where this red candle remains on the weekly time frame. Maybe we come back and try to test last week's lows around 66.40. So a couple of key levels there to keep an eye on. We'll unpackage this every single day in daily profit play, like we do every morning. We had a nice trade on Monday for waterfall income. We had a nice masterclass and training session on pinch point today. Project options edge. We took a new trade on Micron. My practical options. If I've got anybody out there that's interested in trading options, define risk, learning how to create bullish scenarios, bearish scenarios, or sideways volatility scenarios, which is you can make money in option trades with certain strategies, whether the market goes up, down, or sideways. If you are interested in that, then my practical options course, I think, is something you would like. I built this for my, teenager nephews that know nothing about trading. I've given this to my fiance who knows nothing about trading. I've given this to some of my clients who are 80 plus years old that know nothing about options. So I built this with the fastest possible accelerating learning curve, where just understanding some key terms and expressing the option strategy in your broker platform to say, if this is what I want to do in the market, here is an option trade or option strategy for that. My quick guide is $27. If you need that link, you can hit me up for a comment in the YouTube channel, which is youtube.com/Chris Pulver, or you can join me every single morning for the daily profit plan and ask about my practical options, and I'll post that link. But the quick guide is $27 to get you started. If you'd like to upgrade, I have a full course for $497. This one is 13 of my favorite strategies. It's 11 videos. It also comes with a PDF and strategy guide. And I've had a lot of great feedback on these on this course since I built it in the last year or so. These are option strategies that I deploy on a regular basis in my trading. If I can think about a trade in the market, I can take it with options, and that way, up, down, or sideways, I have ways to tackle these markets. So back to the charts here. VIX at 17.2. We're just flirting with the positive or negative on the week. It's still right now just barely above green, but going into tomorrow's trading, if we are below 67.30, which is looking like that's going to be their likely close today. We will see what the zero DT flows look like for tomorrow. If we are going to maintain a negative gamma environment, I would look for more sliding to the downside. What happens overnight in futures will make things also pretty interesting. I didn't get filled on my bear calls or my bull puts today. I just took the daily profit play that worked out nicely. We do have some trades that are looking pretty good on a broken wing butterfly side. We can trade these into the end of the week, but I mentioned this earlier in session today. So this trade right here is up now 85 of the max $100. Now if I can get out of here, I've got 10 cents set on each one. Let me see if I can get out of here for 80 and 80 would be a 160 winner. Maybe I can get, let me try this one here. So if I look to close this trade, 10 cents, 10 cents. Let me see if I can get out of here for maybe 15 cents. See if I can close this one for 15. 15. Not filling. This one at 13. Let me see if I can get out of this one for 15. So that one closed out for 15 cents. Okay, that's the 68.35 pin. And this one for maybe 20 and just grab $80 out of it, walk away, see if it'll close me at 80. Not yet. Okay, I'm gonna put this one. This is a 68.25 pin. I'll go to a 15-cent debit on this one. So I'm gonna mark this one as a winner on my daily profit play. Daily profit play. Broken wing butterfly winner. Let me see what trade it was. This was a 6835. Trade number 498. 498. So it's the buy 6830, buy sell 6835 with two contracts, and the buy 6850. Call fly. So $1 credit was the entry. Entry $1 credit. Close 15 cents debit. Taking 85% of the max credit. So I'm taking a winner there. So that risk was 9. There we go. So that's trade number 498 for a profit. I'll put the other one in at a 15 cent, see if I can grab another 85 cents out of this one total. And right now that's looking pretty probable. I mean, we've got about a 96% chance that trade remains with the 68.25 not hitting profit. So if we, melt down tomorrow or fall lower tomorrow, maybe getting a 15 or 10 cent debit out of this would be pretty good. Okay, so keep an eye on that one for tomorrow morning. Yeah, that's good. That's a good little profit. And the next one is the 25. I'll see if I can set that one up. And then we've got a lot of profits rolling in. So yeah, looking pretty good to fill in the blanks and some more winners. We are up to 447 winners out of just over 500 trades, or right at 500 trades. So we have an 89.4% win rate on daily profit play. And obviously, I've always loved taking some daily profit play winners. Tomorrow's price action. Like I said, if it is a slide here, consolidation, if we are going to stay in negative gamma and fall lower, I would love, and this is wishful thinking, but if I see price this week, at or less than 66.40, I might look to manage this trade for some profit. I have a waterfall income strategy 2 bear call spread at 66.40 by 66.60. And I also have a broken wing butterfly component that's a 66.40 by 66.55. If price this week is not at or below 66.40, this is going to be a managed loss. It's not the end of the world. I've taken on more credit with one roll. But if I can survive this trade, which means we would need price to come back down to retest the lows from last week. If that happens this week with FOMC meeting minutes and no data, I mean, maybe this is a perfect little window to push down from this high to this low. It's about 1.4%, 1.5%. It is potentially in the ballpark of maybe that pullback towards the 21 moving average. It's now 1.67 from the highs this week. If we hit the SPX 21-day moving average, it's going to be close. I mean, overbought conditions on the daily time frame, some sideways price action. We've been stalling here 1, 2, 3, 4, 5 days. Yesterday's close yesterday. Actually, I guess it's today's close because that's a 4-hour chart. My fault. Let's go to daily chart. I mean, today's candle is a bit more decisive than the last couple of days, right? You see indecision, indecision, indecision. I mean, if this is going to kind of roll over here for a little bit of a range and the market falls down to the 21 period or the 52 or the 50 period, maybe I get lucky on that 66.40 this week. So if I can survive the trade, great. If I can roll this thing and maybe give myself another week of wiggle room time wise and roll it for credit, I can at least decrease my risk overall and maybe survive this trade if we end up hitting that 50-day moving average, which I still think is incredibly overbought. The 21 period has been so strong and supportive, but that 50 period is just ripe for some type of correction. Let me count the bars. Last time we were above it was early May. So we've been above it the entire time. Here's your 50 period right here, going all the way back to this close above. And it has been 109 bars. I did a little dive on this to see, how often and how long the market's been above this. The average time away from this 50-day moving average is about 24 days. It's been 109. So that's a lot of bars. That's a lot of time. The extreme, I'm not sure what year it was, but the extreme was a 128 bar count before we hit the 50-day. And I'm imagining that's somewhere around the the run in the 90s or maybe somewhere in the 2000s. I did this test in like the 90s. I thought modern market since electronic trading back in the 90s, survived the great .com crash and the great financial crisis and all this other stuff. But 128 bars is a lot. The previous ones were a 102, 104, 112, and here we are at 109. So we're very close to hitting top 3, top 4 all time stretches away. And I know I've been talking about this a lot. It's exhausting. Clearly, the market hasn't rolled over yet. And realistically, the market isn't giving us any signs or evidence to roll over. But all it takes is one additional push where it goes from a little consolidation to all of a sudden a 0.5 to 1% sell off. And all of a sudden, the market is coming right back down to that 21 period. If it doesn't stop right there, maybe it goes down to the 50. I still am going to be buying dips. Okay. Double up alerts, waterfall income, great trades. Project Options Edge, great trades. All these services that I'm running, we will be looking to tackle some buy on dip opportunities with a variety of strategies. Daily Profit Play will take advantage of it. Waterfall Income will take advantage of it. Double Up Alerts will take advantage of it. Project Options Edge will take advantage of it. Okay. So if we see some respectable pullbacks, I like the idea of buying this dip and having the market figure out when this correction is done, whatever it might be, a 2 to 3% correction, a 3 to 4% correction, whatever it might be. Okay, that is a 1.7% correction. That is a 3.3% correction. That is no larger than what we saw back here in July to August. Okay, and then we had about a 2% correction here. This is about a 2% correction here, and then it was a 1% correction, and then it was just shy of a 2% correction. So even if we match like a 1 to 2% correction, we get close to that 21 period moving average. So I will keep an eye on that. What's going to be something to watch overnight? Futures market. What's happening in the currency market? Something really crazy happened yesterday in Forex land with the yen crosses. Look, oh my gosh, that was not what I expected to see. This is another crazy run on the Japanese yen. Let's go to currency strength for the day. Look at this thing. So yesterday it was a surprise victory for a new prime minister that essentially is bringing on another Abenomics regime. And the Japanese yen get absolutely pummeled yesterday. There was number one, a huge like 200 to 300 pip gap on a lot of those currency pairs. And then we just had continued weakness. You go to today, volatility once again, dollar strong, Japanese yen weak, go across the board on the yen crosses. This is why I've said just be careful on the yen. I mean, what happens here? I don't know. I mean, I look at this chart and I would say, well, now that we haven't broken the structure, there's no reason to sell this Aussie yen until price rolls back over. In fact, if this is anything you want to continue to try to trade, scalping wise, maybe back up to this level, maybe all the way back up to these highs again. I have no idea. Trading the yen sometimes is just a complete wild card. And here's what you do. You trade what you see. You trade what you see, you trade confirmation. If you can get your stop loss to break even or better, I mean, literally setting a +1 or +10 stop loss, you might be rewarded for hundreds and hundreds of pips on a move that just doesn't stop running. But it is not something you play lightly. It's certainly not something dollar cost average into. But looking at all these yen pairs, CAD yen, just a massive rip to the upside from 105 up to 109, almost a 400 pip move. Go to the Swiss yen. We're sitting here at higher highs. This is why I said you can't sell this thing without confirmation. I love the look of the setup here, but until we roll over for a topping pattern, this is not a trade you want to sell. So I don't force it. Euro yen, same thing. Euro yen is right back to the all-time high. I don't know if this is all-time highs, but it has been from the 154 level. I mean, just a crazy 2,000 pip plus move. And until this is going to be on the right-hand side of this trend line, looking to sell off again, this is not something I want to be calling the top. Don't call the top. Don't fight the yen. Trade what you see. That is the best way to keep this trade in check. Pound yen, also another one that looked like, well, if we break below, this 195 handle, maybe it looks better. Well, not anymore. So what do we do on the pound yen? Well, maybe this one comes all the way back up to resistance, right? It's straight up. It is certainly inefficient with how it's been rallying these last couple of days. I think a great trade would be if this thing rolls over on a smaller time frame. Is it going to give us the gap fill opportunity to roll over and come back down and fill the gap? And does it set up a topping pattern and maybe return all the way back down here? I don't know. If it is, it's a fantastic trade. It's one of those trades where if I get the confirmation, I'll set it up, maybe give myself a 50 to 100 pip stop loss. If I get to break even or better, maybe this thing runs 100 plus pips away and then 1,000 plus pips away. I have no idea. I mean, this is a 2,800 pip move. If I'm right, I can try to sacrifice, 1 to 200 pips up here and try to nail some type of confirmation. If I don't get it, I will stay the heck out of this thing. The Japanese yen is a very slippery currency. New Zealand yen, looked like it was rolling over, but it is not. It's still the same thing. Dollar yen, of course, with dollar strength, we're now up into the 150s again, where it looks like all the structure that we have talked about on the technicals, it hasn't broken the trend line, right? Crazy stuff. It just doesn't confirm. And here you are right to the upside. It's clearing all these resistance levels, Now what's next, right? Do we come all the way back up to 158? Do we come back up to 162? I have no idea. If you're looking for a bull flag, something here, little consolidation. If it goes higher, you take the breakout, stop loss below the flag, and off we go. Maybe to the highs at 158 or 160 again, right? If you're wrong, get out quick. So if you don't want to trade it because you think it's crazy, I don't blame you. It's a crazy currency pair. Okay. Other currency pairs, Aussie CAD, getting some overbought conditions. I'm going to stay in this thing to my symmetry level around 9,300. I'll just buy in dips and pullbacks. New Zealand CAD, I'm still long in this one to symmetry around 8,500. CAD Swiss hasn't gotten any love yet. I'm still looking to see if this will get above some of these recent trend lines. Some of the other Swiss crosses that I'm in, Euro Swiss still well supported at 92, but a chop fest. I'm long on pound Swiss right now around the 107, trying to get back to an equal high at 109 or possibly an inefficiency all the way up to 113. This might be a long time away. If we have a decent correction coming in the dollar, which right now the dollar is catching a bit of a bid, here is some of the analysis I'm looking at on the DXY. I said this yesterday in my live session. If we continue to see lower highs and lower lows on the dollar index, this is the S&P melting up more. Okay. If we end up breaking above this falling wedge for a squeeze on the dollar, I think this is where the S&P actually sells off and gold sells off as well. If the dollar catches a bid, I think this is a bit of a risk off mode for the market. Maybe we come back and find some resistance levels before the dollar rolls over into a bigger bear market. I still think the dollar medium to long term is a bear market. But a squeeze to the upside as this trade got very crowded and we kind of double bottomed here around this FOMC low. If we get the squeeze to the upside, I think this is that risk off tone that the market might give us in the short term. So again, melt up if it stays in this dollar in this falling wedge formation, or if we break to the upside and find some moving averages, that risk off tone could be dollar strength. Keep an eye on gold, keep an eye on Bitcoin, keep an eye on the S&P, watch the VIX. We might have a push up in the VIX as well. Okay. Oil, gold, silver. Here's oil. Kind of briefly broke the support around 61, maybe a round number at 60. I need oil to stay above $50 for some of my future trades. I think it's fine. It's still very contained. Gold and silver. Gold was up to some fresh highs again today. We are getting some near-term overbought conditions. I did take profit on all of my gold and silver, and I'm establishing new ones. So I have been holding 2 to 3 year runs in gold and silver. I'm not saying that we can't go higher. I like the percentage allocation, but I virtually doubled my gold position and my silver position in the last couple of years. I think that's a good enough spot to be reallocating as far as percentage goes to make sure that I'm protecting some of the profit that I've worked so hard to build these last couple of years on gold and silver. Technically speaking, we are quite a bit overstretched from the 200-day moving average. I don't know exactly where the top is. Maybe it's this kind of psychological round number at 4,000, which is fine. But I have dollar cost averaging levels. I will be buying more GLD. I also have option positions like selling puts and ratio spreads, and I'm trying to take some ownership back below on GLD, back here between 310 and 290. Actually, my puts are way below that. I started doing puts around like the 280 to 275 zone. So again, overbought. I think short term we end up finding some type of resistance, maybe falling. I'd like to see a pretty healthy correction in gold and silver, just because they've been such good runners. And in fact, I hope that they are. I hope they are. I want to buy more, but I obviously want to buy more at a discount. Bitcoin poked the highs at 126, just above 126. We're pulling back a little bit. I still like Bitcoin to the upside. I think it's becoming more and more mainstream. I've got a couple of big levels here. So measured symmetry to about 132. And also going back to this first big swing back in 2020, there's potentially a 160 target, technically speaking. And obviously, if we take this, trend line, you can take this type of trend line, go parallel, and you see what I'm saying? Like this is support. So we have this high, this low, this high, this low, this high, this low. So if it remains in a channel, it could behave in kind of this fashion. Okay. And that's if it's kind of perfectly technical. This also has that potential blowout move where if volatility is suppressed and all of a sudden it gets squeezed, it might blow through that resistance. And I just want to be mindful that like a 130, 140, 150 target this year as a trader would be a pretty good run to be protected as a profit. If you like that profit, great, protect it. You can always reestablish new positions, or at the very least, start adding some protective puts, maybe doing a collar trade. We talked a lot about that in my live session this morning. I actually spent 30 to 45 minutes talking about a collar position, which is if I own shares of something. So I was doing this an example on, I did on SLV today, but the same thing could happen on IBIT. If I wanted to buy shares of IBIT, I could buy shares right now at 69 bucks. I could buy a $68 put and I could sell a call above. So I sell a call above, I buy a put, at the money or right below it. And if I have downside movement, I can protect my position with a hedge with that long put. If I have upside position, my position gets called away. But the reason it's a collar trade is because I essentially finance the hedge. So rather than just buying a put and spending a debit on that raises my cost basis, I sell a call, buy a put, and I still collect a small credit, lower my cost basis, but I have downside protection in case this thing drops. Okay, so when in doubt, I always like having some downside protection. And if you don't want the upside to get called away, you can keep rolling it, or obviously you can buy one chunk of shares with a collar, and then one chunk of shares or maybe dollar cost average in, and just kind of stay in the game with allocations that you're comfortable with. Right. So that's my kind of gold, silver, Bitcoin outlook. MicroStrategy, surprisingly, we've come down from this is down to about 292 and went all the way back up to 364, but not enough to really show signs of look, Bitcoin is at all-time highs or close to all-time highs. MicroStrategy is way off of that. So again, maybe this move into October. They call it Uptober in the crypto world for Bitcoin. It's had a very positive October most of the time, the last like 10 plus years. But MicroStrategy, what do we have to do on Bitcoin? Do we have to get to 130, 135 for MicroStrategy to get back up to like 370 to maybe 390, 400? I have some shares of MicroStrategy. I want to make sure that I'm protecting the downside as well. What else? Coinbase, big pop to the upside. Ethereum. Let's go look at the spot price of Ethereum. We're still sideways here. Maybe a rip above the all-time highs, but possibly another pullback too. We hit resistance here. Maybe some consolidation. Maybe it's trendline support. If we come back into this maybe 3,200 zone, I wouldn't mind getting long Ethereum again if it breaks the highs. Well, that makes it a little more exciting, doesn't it? But anyway, I like Bitcoin. Japanese yen. Let's see, FXY. I'm trading the Japanese yen. This thing is falling hard. What I will probably end up doing in this one, if it is offered up, this is basically the inverse of the dollar yen. I will probably buy some shares. I hope I don't regret this, but I'm going to buy some shares here between around, I'll say between $60 and $57. I'm going to be buying some chunks of FXY. So I'll dollar cost average, 60 and then maybe a 58. So well, I don't know, maybe $2,000 here, $2,000 here. take a little stake there. It's about a 1% for a lot of my accounts, maybe 1 to 2% for some of my accounts. The reason I would take this trade is because if we go from this level all the way up, this is like the big measure move. This could be a big range. This could still be a target one. This could be a measured target two. I don't know what's happening here on the dollar yen. I don't know what's happening if this is like a big kind of forward pricing of Abenomics again, very weak Japanese yen, or a pause cycle. Because I think the reason the Japanese yen was pretty persistent is the world was getting ready for the increase in rates. BOJ went from negative zero point 0.1 to 0 to 0.25, I guess 0.10 first, and then 0.25, and then 0.50. So they have been going positive in terms of rate hikes. And the thought was that this is going to continue into 2026, that they'd be raising rates up to 1%. Well, since we had this new prime minister come in and win the election, this is now like, well, they're just going to stay at 0.5. And I don't know if they're going to immediately start cutting rates either. I have no idea. So this whole idea of on where the Bank of Japan is going to be monetary policy wise could be radically different. I think that's why you're seeing this radical price action in the currency land. So just be cautious on the currencies. I don't mind taking a stab here at FXY. It's going to be a wild trade. If you look at the JP 10-year, I think it's JP 10Y is the 10-year yield. Yields are still going higher. If you look at the Japanese yen 30-year, yields have spiked all the way up to 3.3%. They are dropping back a little bit. But unless I open up this JP 30-year and it's just absolutely tanking to the downside, maybe that's going to have a big move on the Japanese yen as far as the currency pairs go. But if it's just more global yields are rising, it's going to be pretty attractive to repatriate the yen back into the Japanese or the Japanese banking system, maybe, because it makes it less attractive for this like long time carry trade where everyone borrows in little to no interest rates with the Japanese yen and puts it elsewhere with something that gets positive swap. Invest in the U.S. market, invest in U.S. treasuries or bonds, and just get some type of yield. Right? If I could borrow, even right now, I could borrow at 0.5%, putting in a U.S. Treasury at 3.5 to 4%. That is a pretty safe arbitrage, right? But that's a trade. It's a possibility. It's certainly not growth oriented, but it's as far as like safety goes. I mean, you're borrowing in basically zero interest rates to put it into something that pays 3 to 4%. I mean, for fixed income investors, that's a pretty crazy safe trade. It's not without its potential risk. Obviously, there's issues here with aggressive monetary policy or radical monetary policy, and the BOJ has certainly been a part of that these last like couple of decades. But then coming into the U.S. markets, I mean, we are cutting rates pretty aggressively. So it makes this positive swap environment less and less attractive if the Fed is going to continue to cut rates through 2026. And right now, the rate decisions for the watch tool, this is CME watch tool, and we are looking at a 96% probability the Fed will cut in October, end of the month, and then also out into December, an 82% probability. Those are both very, very high. I don't think the language changes. We'll find out with FOMC minutes on Wednesday, perhaps, if they reveal something about this. Maybe this percentage changes somewhat. But I think the big question mark is as we get into the end of Jerome Powell's term, I think it's May of 2026, what happens in this window here, where everything is just looking at one big pause. So we'd have our second cut here, our third cut here, possibly a fourth cut into Q1 or Q2 of 2026. And then after that, it's just a huge question mark. Are we going to continue to see monetary policy cuts? Are we going to continue to see fiscal spending that's aggressive? I think on the fiscal policy side, yes. On the monetary policy side, I think that with the labor market weakening, it's a low fire environment. You say that now, you're looking at a U.S. shutdown that's furloughing workers and probably trimming the fat a little bit in the government side. But I don't think the Fed is going to change much. So we have seen in the past that it is possible for the unemployment rate to go higher and stocks to still go higher as well, right? But it doesn't mean it doesn't have some volatility ahead. So I think that we get volatility. There's a nice blackout window. Like I said, with buybacks, there's some good technical levels to kind of pull back to the 21 or 50-day moving average on the S&P. So I'm watching those very carefully. I think once we get a correction, if we get a decent 2 to 5% correction, 2, 5, 7, 10% correction, I'm going to buy the dip. And like I said, services, I'll be positioning for it. We can trade this thing every day on daily profit play. Waterfall income will be great for strategy one. Double up will be excellent. And we'll do some more creative ratio spreads and maybe even some naked puts and project options edge. So, okay, I'll wrap it up there. I think this video has been going for a bit. So I appreciate you watching. I'll post this on my YouTube channels and all my socials, and come back and join me again tomorrow. Daily profit play every single day, weekdays at 9 a.m. Eastern time, and we will see you then. All right, thanks for watching, everybody. Like and subscribe, all the good stuff, and support the channel. I appreciate that, and talk soon. Thanks. Bye.